cues are poised towards the more positive, because the Nifty is heading towards that 18,800 mark. Yes, off the highest point of the trading session, but not too much to worry about, because at least those all-time highs seem to be in sight. Having said that, it's the Bank Nifty which is clearly underperforming today. There's a downtick of almost 100 points as far as Bank Nifty goes, and what's doing well is metals. So metals are surging given the fact we have seen a bit of a stimulus come by for the Chinese economy. That has, perked up the demand for the metals, and overall we are seeing a bit of a surge there, and that's the best performing sector as well. The worst performing sector, however, continues to be IT. Of course, there was the incremental negative today because JP Morgan has opened the negative catalyst watch on a lot of counters, and there was a downgrade coming in on persistent systems as well. So the IT pack is on the back foot, but Reliance is finally participating. It's sitting at a 5-month high, and today as well, that's the highest contributor on the upside. What's putting the pressure on the markets, and the reason why the Bank Nifty is lower, as I talked about, is HDFC Twins. They are in focus because reports are suggesting that there might be a bit of a cap when it comes to the investments of mutual funds. So we're watching out for that developing story. But for now, those counters are on the back foot, Aisha.
Oh yeah, that they are. Talk about specific names, and it's clearly Tata Chemicals. That's the one which has been holding high. They've cut the soda ash prices after Nirma. They followed a higher cut with almost 2,300 bucks per million tons. I stand corrected, the stock is actually falling today. In fact, it's the biggest price cut that they have seen since November 2022. Also that the stock goes ex-dividend today, so quite a few adjustments over there. In the meantime, Vodafone Idea has been very, very buoyant all through last week. Today as well, it's holding up 3.25% as we speak. They're looking at an equity infusion of 14,000 crore rupees in the near term. That is what the newspaper reports seem to be suggesting, and that's keeping the stock buoyant. Anisha was highlighting and flagging off the weakness in IT. Persistent clearly is stuck like an eyesore. JP Morgan has downgraded the stock to an underweight, the target price at 4,100 rupees. That stock, of course, under pressure. Bernstein has come out, although with a view on Gland Pharma. They put an outperform rating and a target price of 1702. They're saying that then upside potential is about almost 60% from the current market price in lieu of that target price of 1702 that they've set, and they see partner market share actually recovering. And that's keeping the stock afloat about 2% higher as we speak right now. For the index as well, a mild bit of recovery. The futures have already made it back to that 18,800 mark. But Kunal as well as Manoj on the show today to talk about charts. Kunal, we've been here before. Can we actually hold higher, or are we going to again slip into consolidation?
No, I think we should manage to go into a breakout mode. Now, I think the market seems to have gotten an inkling that Bank Nifty would likely underperform because of the way most of the large cap banking names are underperforming: ICICI Bank, HDFC Bank, Kotak Bank, etc. So I think in that regards, there are other sectors which have made very good comeback, whether it's the real estate pack, whether it's the select auto names which have been doing pretty well. Pharma stocks have managed to see some good recovery. So I think the next leg on the upside, even Reliance today has managed to participate quite well. So I think the market now could probably move up higher with the Bank Nifty underperforming, or at least remaining in a range, if not a major underperformance for the Bank Nifty. I think 44,000 odd could be a pivot range or a support for Bank Nifty. But my sense is that possibly in the next few trading sessions, if the strength in the large cap names like what we've seen today, the likes of Reliance, etc., if that sustains for even a couple of days, then I think we could be closing in towards the new highs pretty quickly.
Okay, closing in on all-time highs pretty quickly. That's the word coming in for Nifty, though Nifty Bank, as Kunal also attributed to, is the one which is in the red. Let's take the view from Manoj Muralidharan as well. He's also joining us on the show. Manoj, what's your take as far as the market is concerned? At least we're seeing some sort of buoyancy from the heavyweights as well now.
Yeah, good afternoon. I guess there are a couple of things that we need to consider. First is if you go back maybe 100 odd days, FIs have been on the shorting spree. Their net average short in the index futures used to be around positive of 70%. And now, at least in the last two expiries, even in the June contract, we are seeing their net longs and shorts are almost equal at 50%. Now, that is one thing. The second thing is usually Nifty has a participation of at least 1.25 crores in terms of open interest, but this time in the June series, it's shying away. We are hardly at around 92 or that clearly says that the instrument or the participation is not really from the Nifty futures much in a trending market. It could more be from an option trade. So what we feel is with the volatility index closer to 11.5%, the Nifty has a potential of 150, 200 odd points. So, but then we feel it would be grinding, and maybe we get alpha in terms of gap up opening, and we are not really seeing any intraday clear buying that happens. Even last couple of days, like you were mentioning, there was money which came out of automobiles and IT as a sector, which was doing good in your April and May series, and we have seen for the first time metals as a sector adding some money. So we believe that with the bank Nifty not really working in tandem to what the Nifty is, maybe 150 odd points, 18,900 to 950 can be a target for the Nifty. But then I believe that Nifty is more going to correct towards 18,500 to 600. That might happen eventually in the June series. That is when we might see a trending market go on. So it's a range bound session with a positive bias. Use an option strategy. We can go for a long straddle, simply buying an 18,750 strike call option to get it for 50 rupees. You hedge it by buying a put option also of the same strike with 80 rupees. The stop loss should be 40 rupees, and an expected target of close to 140 should be on that strategy.
Right. Okay, that's the call coming in on Nifty. And of course, Manoj as well as Kunal both highlighted metals. So metals it is. Let's focus on that space. They've been clear sectoral outperformers of the day at least. But what's been aiding the rally? Ashesha is here to put all of it into perspective. Ashesha?
Well, yes, metal stocks are buzzing in trade today. In fact, Nifty Metal Index is the biggest sectoral gainer in today's trading session. Remember, China is the world's largest consumer of commodities, and any positive news that comes in from China is positive news for the entire sector. Yesterday, the Chinese government cut 7-day reverse repo rate to 1.9% from the earlier 2%, and this is the first cut that we have seen since August 2002. This is a positive news for the entire Chinese economy, which could boost the real estate sector of China, which in turn is a positive for the Indian metal stocks as well. In fact, we have Chinese data which has been weak of late, which has been impacting Indian steel sector as well. Imports have been rising from China, which is impacting the domestic steel sector, because of which domestic steel prices have corrected nearly 14 to 15% year to date. In fact, if we look at the index on a year to date basis, Nifty Metal Index is down nearly 10% versus Nifty 50, which has gained nearly 3%, which means significant underperformance is what we have seen as far as the Nifty Metal Index is concerned. Global recessionary fears, rising dollar index, rising interest rates is the reason why year to date we have Nifty Metal Index is underperformed. Today, of course, on the back of strong commentary, on the back of positive news flow that has come in from China, which could boost the Chinese economy and in turn the Chinese real estate sector, the entire metal pack is in focus today.
Okay, Sesha, thank you so much for joining us with that. Let's take it across to Nitin Raheja from Julius Baer as well. Nitin, what's your take on the metal space? Would you be a buyer at all?
Look, I think the metal space is really more of a short-term tactical trading play. If you really look at what's happening is, the Chinese over a little longer-term period, it's very, very clear that the Chinese economy is slowing, and all measures are being put in place to sort of try and increase the growth rate. They have disappointed in terms of the numbers that have come, and the expectation is that this slow growth is not going away in a hurry. So I think metals are going to be range bound. You're going to get news flow driven trading bounces or rotational trades taking place as markets remain buoyant from time to time as that. But so they are more of, if you ask me, more trading plays rather than long-term fundamental plays.
But in general, is there a reason to avoid anything which is global denominated, be it metals or IT, be it exporters? Because China has not come back, US is slowing down, Europe is on the brink of recession. So just avoid anything which has got a global facing business.
Well, you're right, Nikunj, in that sense, and we've really, if you look at it long term with a lot of Indian corporations which have gone global, you actually see valuation re-rating take place in most of those corporations, because you align to slower global growth rates, and now especially with so much of haziness over that. But against that, you also have a phenomena where if you look at the sectors, some of the stocks have corrected to levels where the valuations of those stocks have become attractive, and in a market which is remaining buoyant, what is really happening is you're seeing this rotational trade, which to me is more of a tactical short-term trade that takes place from time to time, as we have seen in this For example, we saw IT come back. In fact, IT has been a very interesting pack where you actually seen some of the mid cap IT stocks in the results actually do very well compared to their larger peers, and so on and so forth, and have seen quite a bit of a run up happen. So I don't think this can be sort of played broader, but your point is well taken that I think the domestic plays today, from a growth, from a visibility perspective, are far better areas to focus on.
Right. Nitin, we were just looking at the year-to-date best performers within the mid-cap pack, and there was interestingly PFC as well as CG Power amidst that. We all know as to how the demand for power has seen a scale up, but wanted to understand how should one best approach the sector investment-wise?
So, I think it's been sort of well established that after years of virtually no investment, we are reaching a very, very critical stage where you are actually seeing, power shortages, or most utilities operate at, very high PLFs. And that's going to sort of drive investments into the sector once more. Hitherto, most of the investment was happening in smaller captive or renewable areas. But now you're again seeing an initial impetus towards that, especially, grid investments have already been happening on the transmission side. But you're starting to see initial signs of, actual captive or sort of merchant power plants being set up in terms of announcement. And that's probably what has driven the prices. I think you are going to see a continuation of this trend, at least, in the near future.
Banks are just not participating. And Kunal, that now becomes a great, area of concern. That banks are not participating, HDFC Bank is not chipping in, FIs are buying, and yet banks are underperforming. How long can an IDFC Bank or IndusInd Bank take the markets higher?
So yeah, Nikunj, I think, but I would still consider that it's a phase of the market where the banking stocks are underperforming. So I'm not sure that by when would the selling be over, but I think it's a churn which is happening from banking stocks, to other sectors. For example, today you have the metal stocks which have been doing exceptionally well. In fact, it's the second consecutive day for many of the metal names which have managed to spring up quite well, large cap names, Tata Steel, JSW Steel, etc. So my sense is that it's maybe a natural churn, or maybe some sort of correction which has come back into the, the selling which has come back into the HDFC twins. That could probably be an overhang for the banking sector, but it's a passing phase with every kind of a bull trend or an uptrend, that some sectors, some stocks consolidate. Just for example, I think over the last 4 or 5 days, if I'm not wrong, even the Nifty Auto Index has taken a pause, where the large cap names like M&M, Maruti, Bajaj Auto, etc., even these stocks have gone into a bit of correction. So as I said, I think it could just be a phase for the index. For the Bank Nifty, in terms of resistance levels, 44,200 is a spot-wise resistance. So I think whenever we would probably break out of that 44,200 mark on the spot levels is where I would expect the momentum to come back.
44,200, that's the line in the sand for the banking space. But time now for a quick break. But as we do that, let's take a look at a couple of counters. Delivery as well as Zomato, they're going divergent ways, because delivery is something which is spiking up as we speak, a 2% gain. And if you look at Zomato, that's sitting with a cut of around 4 to 5%. So a bit of a profit booking on Zomato today. But slipping into a very short break. Don't go anywhere.
Let's talk about some of the other buzzers in trade. And today, of course, it's Tata Consumer, which is right there on top. Idea after that fundraise buzz. That stock is holding higher, seeing another sizable gain today as well. And this after a very strong last week. Tatacom, we've highlighted as well, has been a very strong show, another 3% higher there too. And then the Realty pack continues to hold up. So after that big breakout on DLF, it's now Oberoi Realty, which is sizably moving up today. It's a good 3.6% move that you're seeing on Oberoi Realty. And by the way, the chunk of the move has only come in the last half an hour, or rather last 1 hour or so. Kunal, still like DLF, or would you diversify into names like Oberoi Realty, etc. too?
I think still like DLF. We'll stick to that. Oberoi Realty also looks attractive, but my only concern on the short-term charts is that most of the indicators, so I was actually looking at the charts for the non-FNO names, Prestige, etc. The indicators have come into a deep overbought territory, which means that there is a very high degree of likelihood that in the next 1 or 2 trading sessions, we may expect some decent cool-off into most of the real estate names. So I think in that regards, I would still not venture into buying or adding these stocks at current levels. But over the next couple of days, if there is any kind of a 3 to 5% dip or a correction into these names, specifically the likes of Oberoi Realty or maybe DLF, then I think that could be a good enough zone to add further.
Okay, not just Oberoi Realty, but the entire pack we've been highlighting of late has been holding out very, very smartly as well. That, of course, is one space which is looking buoyant. Telecom being the other one, that as well has been holding out very strong. Vodafone, like I just highlighted, Telecom has been doing well. And Bharti as well has been holding quite smartly too. Nitin, just wanted your thoughts in on both realty as well as telecom and whether there's still investable opportunities.
No, so I think reality has been, has done really well. Most realty companies have actually, so it's benefited from a couple of things, right? So it's been the consolidation in the sector with the organized reality actually gaining market share at the cost of unorganized reality. The branding that has taken place, which has enabled most of these companies to become marketing machines and the way they've sort of gone out and, sold. And the third is the fact that the balance sheets of these companies have never been better. All of this led with, but I think you're also going to have a couple of challenges as far as the reality companies are concerned. One is the fact of the impact of interest rates being where they are, and if there's any further hike, which doesn't look likely, but if there were to be a further hike, that could be one headwind that they could sort of hit. And the other is that for a very long time over the last 5 years, prices were very stable. Now, in the last 6 months to 1 year, we've actually seen prices going up, which is going to affect the affordability index. Having said that, I think the visibility on business is good in the short term for them. The pre-sale numbers have been very robust. So I think they will continue to do well. There might be short-term corrections, but I think real estate companies are in for the long haul out here. As far as telecom is concerned, I think it has become a two-player game, and there's a marginal third player which is in play. I think a lot of the spending on 5G infrastructures has been front-loaded. As it takes off over this period of time, we should see strong cash flows emanate for the telecom businesses. And you've seen companies in that sector actually reflect that in terms of the performance. So I think telecom is going to be a steady cash flow generating sector over the next few years.
Okay, so cash generating sector, that's what it looks like. But the other cash generating sector has been automobiles, right? And it's been raking in good money for investors as well, given autos has been one of the best performing sectors. And going forward as well, the launch pipeline is quite strong. In fact, for Maruti Suzuki itself, it's getting ready to launch its most expensive car yet. Its upcoming Invicto is slated to be launched on July 5th and will cost more than 20 lakh rupees. What does Maruti's entry mean in this category, and what could it mean for the entire sector? Shrishti is joining us to talk to us about that.
Well, yes, 5th July is the day that we're going to be looking at, wherein Maruti Suzuki is coming up with its most expensive car launch, and that is Invicto. That will be based on Innova High Cross, and the company will come up with a price of over 20 lakhs car, and that will be a segment wherein Maruti Suzuki will enter, because they are promoting it as it is going to be a luxury model by Maruti Suzuki, which is going to be quite new for the company. But the big question is then, can this be a threat to the companies which already have a dominance in this particular segment? That is the MPV segment, wherein XUV 700 from Mahindra as well as Tata Motor Safari has a good hold. So let's try and find out that. But apart from this particular launch, a couple of more details, wherein Invicto would be based on Toyota High Cross platform and will be manufactured in Toyota's Bidati plant in Karnataka. Other than that, let's talk about the whole MPV space. So Maruti Suzuki is a leader in this particular space. They already have the van and the Ertiga in this space. But coming to the luxury model, this will be the first ever launch by the company. But the key to note by the consumers will be the brand perception, because Maruti Suzuki till date is known for its mileage and more affordable cars or so. But luxury really something that consumers don't expect from Maruti Suzuki, but they are now seen to be breaking those barriers, and with this particular launch they will cover all the portfolio gaps. So that is something new by Maruti Suzuki. Other than that, though it is will be based on Innova Hycross, so on your screens you will see the sales data for Innova Hycross, and analysts believe that more cannibalization can take place from Innova's portfolio rather than this being a threat to XUV700 as well as Tata Safari. So 3,000 is what the company sold for Hycross as well as for Krista. The sales for monthly data is 1,500, and for Tata Motors Safari as well as M&M XUV700. Over the months, we're going to be looking at what kind of a sales number or the booking numbers keep coming in for Invicto. That will be the key to watch out for. But for now, analysts are believing that it might have more of a cannibalization effect rather than a threat to both of these companies. Back to you.
Okay, that's the take coming in from Maruti's latest offering along with Toyota and getting into that 20 lakh plus category. But my colleague Sumit Chaturvedi also spoke with Shashank Srivastav about what he's making of Maruti's newest offering.
So we will have to wait for some time to see the booking trends and what are the trends post the price announcement before we come to a conclusion about what the stable demand would be. But really this segment overall, if you look at the 3-row SUV MPV segment, was about 258,000 last year, out of which in the premium side, which is greater than 20 lakh category, was about 110,000. So the volumes are, there are 8 players in this segment, including the Karens, the Alcazar, the Hector Plus, the Scorpio and the XUV700 and so on. So the volumes may not be very large, but it's also good participating in a segment which is rapidly growing. The greater than 10 lakh category has grown to be 5% of the industry. It was just 1% a couple of years back.
And so looking at overall market, this is going to be only automatic variant as we understand.
So the variant strategy and what all the variants will be available at what prices we'll be announcing on the 5th of July at the time of launch of the Invicto.
Okay, for the markets, we're holding up around that 18,750 mark. Bank Nifty has recovered from the lowest point of the trading session, but the outperformance continues from the broader markets. On that note, Nitin, we let you go. Thank you so much for joining us, and we'll step into a very short break and see you in a couple of minutes.